slowly go around and everybody give us their name so we've got it on the record.
Okay.
Roger, go ahead.
I'm Roger Bldg, Administrative Officer for the county.
I'm Sean McCutcheon at Marsh McLennan Agency.
Ben Cornwell, CFO of the county.
All right.
Hope Barker, Senior Account Executive with MACo.
Candace Payne, County Commissioner.
Andy Hunthausen, County Commissioner.
Tom Rolfe, County Commissioner.
And Nadine McClellan.
We're hiding the clock. All right. Let's go ahead and go right into the presentation of the annual insurance renewal.
Sounds good. If you open up the first page here, we'll just quickly review the agenda. So first off, we have the benefits of pooling and why you should choose MACo. And then we're here to talk about money anyway, so we put that right at the beginning with our contribution page. A few changes to the deductibles that we have this year, and then we have the renewal summary breakdown of property versus liability. Then we have a few pages on our claims and loss review for the county. I have a page on the capital adequacy that was provided by our actuary, and then a few pages on our risk management services that we provide. And then we do not have the property acknowledgement form, which basically says that you've reviewed the property with your agent, but I do have an extra copy that I will leave with you guys today. And then discussion, but please discuss as we move through this. It makes it a lot less painful. So, yeah. So next page here, we have the benefits of pooling and why MACo. These first two with stability and savings kind of go hand in hand, but private insurers are pressured to provide short-term results to investors, and you are MACo's priority. This allows the PCT, Risk Management Authority, to maintain stable rates even through volatile times. So last year, we had a few liability claims that were hanging over our head, which made us less profitable to our reinsurance carrier, and we were potentially going to be dropped from them. So we had to go out and look for a next best option. Thankfully, we're still with them, but last year we paid just under $1 million. This year we're paying just over $1 million, but next best option was over $3 million. So exactly. So we make sure that we are working closely with our actuaries so that if we did ever have to go out to next best option and it was that big of a jump, then we're not coming back to you and saying, so sorry, ladies and gentlemen, but we have a 75% rate increase this year because we have to pay for our reinsurance. So we make sure that we are in a place that we would be able to eat the majority of the cost if anything like that were to happen. And then savings, MACo works closely with our actuary to keep contributions low while still maintaining the health of the pool. And excess funds are, quote, returned to the members by investing in proper management. So we're not able to necessarily do like the retroactive returns or the checks cutting back to the counties the way that work comp does when your mod factor is in a good place. But we make sure that we're investing properly so that way we're seeing income and returns there as well as not losing any money on inflation. And then coverage, we want to cover your claims. Private insurance carriers will find the smallest excuse to deny coverage. So we had a case where the county had not updated their actual cash value on their vehicles in quite a while, and they had the total loss of a vehicle. So instead of just paying out, or at the time of the loss, the ACV was significantly less than what they were paying in premium for the vehicle. So we were able to go in and they had some work done. I believe they got a new transmission, new tires, etc. And they were able to provide us with the receipts to show that they had put some work back into this vehicle. And we used that as an excuse to increase the value of the vehicle. So we were able to give more back to the county versus saying, sorry, you're SOL and we're paying you the minimum amount possible. So we do what we can to give more back versus less.
What is ACV?
Actual cash value. I think so. What the value
good with that?
I try to say them with it, but sometimes you just refer to them so many times as ACV, you don't even know what they stand for at this point. But yeah, actual cash value. So I'll make sure to say them out loud before I refer to them with an acronym. But member-driven, MACo members are our top priority, and we provide risk management services to help with litigation defense, human resource assistance, land use guidance, finance guidance, and public safety risk management, which we have a few pages that break those down in the back. So next page here is the contribution renewal comparison. So this year we are looking at a 13.0% rate increase. That is mostly due to the property value increasing after appraisals. So if you look even just in the building and contents, that TIV is total insured value, there's a difference of just under $52 million from the 25-26 policy year to the 26-27 policy year. And then when you add up the total of building and contents, vehicles and equipment last year versus this year, it's a 41.3% increase on the property values that we're covering this year. So two things that I know Bonnie had discussed with you about the historic values as well, which are pretty high on your courthouse and the Myrna building. Yeah. So that does increase significantly with the historic value. And one of the things that I recommend is, like Madison County, for example, they are required by the state to have historic values on some of the properties that they have. However, Flathead County just did a remodel on their courthouse a few years ago, and they made design choices that looked historic at a modern day cost. So it looks like it would be historic. However, it came at the cost of, modern day versus having to do like the like, kind, and quality with the marble staircases and all that jazz. So one of the other things I also like to recommend to kind of ease that pain of the increase but it does come with a little bit of a risk. So I don't recommend it, but it is an option. So in order to have full replacement value, if you had a total loss of the building, you have to have the value set at the most recent appraised value, right? But you are not required to keep it at that value. So you can do something called stated value. So for example, a lot of times if you have a building that you're not using the whole building, and you only use 2 floors instead of all 3, and if you were to have a total loss of the building, you would not rebuild to this size. So I would say we'll just insure it at a stated value of maybe 75% if you don't plan on doing it to this, like, kind, and quality. So that is an option when you're assessing some of these buildings, as well as doing a stated option and increasing it slowly over the next few years. So if you have a building that's worth, the new appraisal value is $10 million and it was previously 6, maybe only increase it to 7 million of that stated value. So then, increase it annually until you reach the appraisal value. The only problem with that, it does come at the risk that if you did have a total loss of the building, you're only going to get the stated value instead of the total replacement value there. So it is an option, but did you have any questions over this page at all?
Commissioners, sir. Well, I just asked on that stated value, if it's a partial loss, will you still go up to that stated value, or is there a discount?
It would still go to the stated value. Yeah. They come in and they do an investigation of it. So you have the adjuster come out. So, if the adjustment assessment reached that stated value, you would get the full stated value, but it's going to go based off of the adjuster's assessment.
So say like it was a 10, the appraisal value or the actual value is 10 million.
Yep.
And they only want to insure it set to 7 million.
Yeah.
And there was it was a partial loss, but it was 7 million in damage. Would you get the full 7 million?
If the adjuster came in and it was $7 million worth of damage, then yes. Yeah.
Even if you had only insured it for 6 million?
7.
No,
Seven.
7.
Okay, sorry, I misunderstood.
No.
Just follow up. I know that there's probably maybe a quick turnaround for you guys, but for the Myrna and for the courthouse, we were wanting to do the appraised value as opposed to the historical replacement value. Is that that would drop our coverage to 140?
Okay.
Is that are we allowed to do that, or?
Yeah, absolutely.
Okay.
It would just have to change within our system to say it's not at historic value,
Right.
And it's just at the standard appraised value, but you absolutely have the option to do that.
Because we'd like to do that. As much as we'd like to replace the courthouse for what it is, it would probably rebuild it to its function, but not
quality. Yeah.
If it was a catastrophic event.
Yeah.
But still, you have $20 million of coverage if the roof falls off, or
correct.
If any major event up to 20. Yeah. So that would also affect the rate then, right?
Yes. Yeah. Yep. So that decreasing would obviously decrease the premium as well. So, and we'll get into it in a few pages. We have the actual formula. Our actuary doesn't provide the formula for liability, but they provide the formula for property. So we have that broken down here in like 2 pages. So we could go through that and break that down.
Right.
So the next page here with the deductibles, you did not make any changes to what your deductible was chosen as. However, if you look at the right side, the last 3 bullet points with zoning, ethics, and floodplain, those were previously listed on as endorsements. So you chose whether you wanted that coverage, but it also came at a cost to the county to have that extra coverage there. But as I had previously stated, we're working with our actuary, and thankfully our pool has grown to a place that we're comfortable enough to provide those at no additional cost now.
So which are the 3 that we were trying?
The zoning, ethics, and floodplain. So it's all the way on the right side, the last 3 bullet points here. So, and that's going to be for defense costs. So if you were to get sued for something regarding one of these 3 categories, then we would provide the defense for it with the $10,000 deductible there.
Okay. Is there a limit on that defense cost?
No. So it would tap into our reinsurance at one point, but no limit to you. Any questions on this category?
Okay.
So this next page is the breakdown that I was talking about with our renewal summary. So if you look over at the right side, this is the breakdown of all of our property that I was referring to. So the board did vote this year for a 4% decrease to the property rate. But when you break that down a little bit further, vehicles is $1.10 per $100. And then equipment, 44 cents per $100. And I was able to do a little bit of research, and I had one agent that had reported he had put a semi truck on a commercial line that he had that's similar to what the county had commercial wise. And that was looking at closer to $5,000 annually to have coverage for that, to where for the same value vehicle on our coverage was closer to $2,800. So lower there with rates on vehicles. And then equipment, I did find one coverage that was in the 30 cents, but in order to get that rate of 30 cents, you had to have a massive fleet. So for a county this size, you are looking in the private market anywhere between 50 to 90 cents. So we were extremely competitive there as well. And then for building and contents, last year we had 0.2787 per $100. And this year we got the decrease to 0.2714 per $100 on building and contents. And then in the fine print right there, that 10% inflation increase, that does not apply to you because of the appraisals. So we do that for the counties that have not gotten their appraisals yet to keep up with the inflation and the property values increasing. So that doesn't apply there.
So what does it? I guess I'm not following.
So we vote in so the appraisal cycle is a 5-year cycle, and it takes 3 years to get through the entire state. So you were on the first cycle. So you got your appraises last summer, and then we're doing the central portion of the state this summer, and then we'll do the eastern portion of the state next summer. And then we have a 2-year break, and then we start it all over again. However, even though we have a 2-year break, inflation still goes up during that time period. So we vote on a percentage to increase inflation-wise annually to make sure, and we use the Board of Trustees.
Thank you.
So Property Casualty Board votes on that based off of recommendations from the actuary, recommendations from our broker, our appraiser, as well as like construction cost index. And we make sure that we're making an educated decision. But unfortunately, previously we had voted for like 2%, 3% lower percentages to increase annually, and we were not aggressive enough with it. So the property values increased significantly more than we had anticipated, and that's why they voted to get a little bit more aggressive with it for that 10% here. But since you already had your property values appraised, it doesn't apply to you because you are up to date on all of the appraisal values. But then over on the left side of the page, we have the liability, and the board voted for a 7.5% increase to the base rate there. And then as previously stated with vehicles and equipment, that was no change from last year. And then fidelity and crime, we did have an increase last year. So it was $19 per employee last year, and it did increase to $23.86 per employee this year. That is a 3-year contract though. So unfortunately, the market hardens a lot faster than it softens. So we are seeing the market soften in that area. However, it comes down slower than it rises. So we're hoping at the end of this 3-year cycle that it will come down and then we could lock it in at a lower rate for the next 3 years. But there will be no adjustment for it for the next 3 years. So you can bank on that 2386 for the next 3 cycles. Any other questions on this page? So the next page here, it looks a little funky because we have the liability portion of it blacked out. The reason that we did that is because we have some open claims in liability. And on average, we'll go through and our claims team will assess, okay, historically, this type of claim costs $100,000. And so they will set $100,000 in reserves aside for that particular claim. Well, if it's against a claimant and now that this is public record, they see, oh, they have $100,000 set aside. I'm not settling until I get the full $100,000. We don't want them to know how much we have set aside for the claim. So we've blacked that out, but we could get you in touch with our claims team if you're wanting to know exactly how much is in that category for each open claim, if you guys are interested in seeing that. But we do have the percentages here. So we do a 3-year loss ratio that we hold for you, how much you've paid in contributions versus how much we've paid out in losses. So for liability, you're sitting at 21%, which is actually very good for this size county, especially for having a detention facility the size that you do. And then the property loss ratio at 26% over the last 3 years as well is pretty average for this size county also.
Are the premiums based off the 3-year?
It's calculated in, so it's employee count, loss ratios, property values that we went through.
But just based off the last 3 years, not.
Yes,
not
correct.
okay.
Yep. So, and I believe with private carriers, it's like, depending on the carrier, it's 5 to 10, correct?
3 to 5.
3 to 5, okay.
Yeah.
So these next 2 pages kind of go hand in hand here. This top one is more of just a visual representation of everything that we've discussed previously. So we did remove the open claims. So this is just claims paid for the dollar amounts. So this first bar graph here in the blue is the number of claims in that coverage category. And then in red, it's the dollar amount paid in that coverage category there. And then you can drop down below that and see where kind of the problem areas are. Historically, the road surveyor and sheriffs are the biggest liabilities, but then you guys did have some pretty big losses on your fairground last year, which obviously increased that to kind of be the problem child this year. But then the next 2 bar graphs are the dollar amounts paid and then percentage wise per department there. And then the next few pages are each individual claim that we have on the county. And then you can see the blacked out area for those that are open as well. I'll give you a second to look over that and just let me know if you have any questions on any of those claims.
So on the second, well, I guess it was apply on the first page to that first item. It says no paid cost incurred. That's blacked out for the same reasons before.
Correct. Yep. So they could, even though there's been nothing that's paid out on it, and these were run in late February, early March, so there could be a few updates since then. But the claims are still open. Last time I checked a few days ago, but the total paid amount versus total incurred, you could still have $100,000 sitting there. It just hasn't had anything paid out in that claim quite yet. But if you were to close the claim today and had paid nothing out on it, then that would drop. And unfortunately, the reserve amount is what's held against you in the loss ratio, not what's paid out. So if you were to close that and you closed it at $0, ended up paying nothing out, then your loss ratio would drop by $100,000, which would, I mean, I don't know if it's $100,000 on this case, but just for conversation, $100,000, it would drop off of there, which would decrease your premium as well.
This one is liability and property is
Correct. Yep. On the next page there.
And when it says closed, that means it's settled,
Yep, it is
And-
done, paid
okay.
out, done,
not ongoing.
correct.
Okay.
Yep.
So,
Only one. No, so,
oh, there's.
yep,
Greece. One on the first page, 3 on the second.
oh, were you talking about the open claims?
Yeah.
Okay, yep.
Questions on that? Yeah.
Right, okay. So this next page here, this is our capital adequacy. So one of the things that I heard last year and have heard a little bit this year is it's not sustainable for the counties to have these rates increasing significantly like this every single year, which I completely agree. But what we're doing is we're basically just unfortunately in a growing phase. So we work with our actuary, and this was provided by our actuary, and you can see from 2016 up until 2026 that relatively consistently we've been trending in the right direction. Once we get into that green target range, then we're able to offer a lot more discounts to the counties. So we're able to say, okay, we did a decrease in property this year and we're doing a 0% increase in liability, or do a decrease on both of them, or 0% on both, and able to offer more discounts and more services to the county because our reserves are in a better place. So this is our contributions as well as our investments on what we're bringing in, and then versus how much we're paying out in claims or projected claims every year. So thankfully we're trending in the right direction, but we're just still in that kind of painful growing phase right now. And I did have one agent report that he had an airport authority that had a fire loss, and it wasn't even a total loss, but because of that one claim, they had a 30% rate increase to their premium that year. Another thing that we have that's a benefit to the county is our grace period. So depending on when you add a piece of equipment, a vehicle, building, is when we charge it. So if you purchased a new building today, you're going to start paying for premium today in the private market, to where we wouldn't charge you until next year. So unfortunately, next year starts in 2 weeks. So if you added it today, you get 2 weeks free. But if you purchased it in August, then you would get August until the next July free. So, or shouldn't say free,
Through
but
June.
yes. So at a benefit to the county, we don't charge you until the next policy year. So
Do they get a reduction if they sell it mid-year? They sell a building mid-year?
yes, on the next policy year
But they
though.
don't get it that's in that same year?
No.
Okay.
I mean, if you were to purchase and sell in the same year, then you would have coverage on it at no charge at all. So, or purchase and loss, then you would just pay out the deductible for it. So if you purchase a vehicle in August and you wrecked it in December and had a total loss of the vehicle, then you would just pay the deductible and you would have had full coverage at no cost to the county.
Okay. But like if they were to sell, so say after the renewal,
Mhm.
they sell a building or
Yes.
sell a vehicle,
Yep.
do they get the reduction for that in that policy term? Or
It's
does it
in that policy term, but it doesn't, they don't
Doesn't
pay
get
it
to-
until the next year.
to the next
Correct.
year? So it goes both ways.
Yeah,
Correct.
it's already been paid for the year. So
So they don't get a refund for that.
no, not during the policy year. No.
Okay.
That makes me think of, so of that property list that we have a property on there that we know that we're gonna be offloading next year.
Okay.
Can we take it off now?
Yeah. I mean, but if you lost it and you still owned it, you can take it off now. But if
But
you
we're
lost
at
it,
risk.
you know, you're at risk of losing out on it. But yes, you do have the option.
So it would be both ways. Private carriers, you get the discount for their after you sell it.
Sure.
Where this one you wouldn't, but you also have to pay premium if you buy something mid-year.
Mhm.
So if
Kinda
I have
offset.
premium for maybe a month or two.
Yeah, they'll do actual in the private market. So it's actually when you sell it, actually when you buy it.
Mhm.
So it's just trued up.
Yep.
So
One more question on
Yeah.
this, is this both liability and property, the totals here, do you know offhand? Is
For
it
this page, is
Yeah.
that what you're talking about?
What
I
page?
do not.
this page?
Thank you.
Nope, they did not provide dollar amounts for us aside from just the range in the millions on the left side.
But you don't know if it's just the liability for.
It's the whole pool. So this is both property and liability with contributions paid in and investments, estimated investments the last time that it was reported versus how much we estimate paying out on claims.
Gotcha. That's answers my question.
So then this next page here with our risk management services, over on the left side, we have Dan O'Malley, our public safety risk manager, and Brandon Harris, our peer review coordinator. And I know that they work with your detention facility and law enforcement pretty closely. I've gotten to do a tour of your facility a handful of times. They're a fantastic resource, even outside of detention, but anything law enforcement related. Brandon had brought me in, introduced me to Sheriff Dutton, and I got to see all of that fun stuff up there that they've got going on as well. So fantastic resource. I've got another page that kind of breaks that down in detail there. Then we have Mackenzie McCarthy, our general counsel, and Karen Alley, our associate general counsel. Mackenzie focuses more on HR and employment law, and then Karen focuses on zoning, land use, and subdivisions. But one thing I like to note with these two is they are not your attorney. So there is no client confidentiality there. So if you're looking at terminating someone, you reach out to Mackenzie for advisement on it. She recommends against it, and you email her back and saying, well, I didn't like him anyway, so we decided to fire him, and he decides to file a claim for wrongful termination. That email saying I didn't like him, so I fired him is discoverable. So one thing I like to note there, but if you are in communication with our county litigation group, you do have client confidentiality there. And then on the right side, we have Nancy Everson, our governmental finance director. She has been a fantastic resource for internal controls. I was about to say, I was like, you know more than anybody who she is and the resources that she has. And then Carly King, our IT manager, helps with anything cyber related, not just IT help desk. I don't think that she brags on herself enough. A lot of people think she's just IT. However, she was just presenting at the White House last month and received an award for her response on a terrorism threat. So she is a big dog and doesn't give herself enough credit. But she also has a lot of resources for telecom cost reductions. So we had one county that had some major blind spots in their detention facility, but they were a smaller county, so limited resources, limited funds. They got quoted $40,000 for their cameras, and Carly was able to get them for 12. And we've done a pilot program, one of the counties, they absolutely love them. So it's not like she's ordering them off of Amazon. They're still top quality products. And then lastly on this, services provided on the next page, the county litigation group that I referred to, we did a little bit of research here, and we are on average 26% less expensive or decrease in cost comparatively to the outside counsel that a normal private carrier would use. So generally speaking, if you have a liability claim, your insurance, whether you're with us or a private carrier, is going to cover the cost of that claim, right? And when you just think about that, it's like, okay, well, I'm not going to pay for it. The county's not going to pay for it. So what does it matter? But that is still held against you in your loss ratios. So if those costs are higher, your loss ratios are going to be higher, which is then going to increase your premium. So like I said, on average, 26% less there. And then I think a lot of counties don't know that we have sexual abuse coverage. So I wanted to point that out because we had one county that almost did not get covered on a claim because of the time frame in which they reported it. So this is the exact wording from our policy. And if you look at section A there, it says 180 consecutive days after initial discovery of any actual attempted or pending alleged sexual abuse. So if you were to ever hear of anything, you want to make sure you report it right away because they have up to 3 years to report the claim. So if they're able to prove that you knew about it and did not report it within that time frame, then there's no coverage for that defense cost. So we want to make sure that if you ever hear of anything, county on county employee or civilians on county property, if there's anything you ever hear, just report it. It won't be held against you if it doesn't turn into anything. It's just basically a note on your account. And then this very last page is just the jail review program. This is pretty self-explanatory. I believe you guys have already done your peer review, if I remember correctly. But one of the things that I like to point out, thankfully, I don't have much knowledge or history of being in detention facilities.
You don't?
So I do not, no, thankfully.
We had heard otherwise.
Look, that was before my time at MACo. I passed my background check, that's all that matters. But I did not know that there were revenue opportunities there. So one of the things that one of the counties reported was their Zyn program. So they are purchasing Zyns, the little nicotine pouches and whatnot, and they jack up the price. They use it as commissary, but they do it based on merit as well. So you have to behave in order to be able to purchase the Zyn. And apparently it has been fantastic for behavior issues in the detention facilities. So bad behavior has decreased when bribing with nicotine. And I did, thankfully, one of my commissioners was like, that's ridiculous. And he was a good trooper because he had a ring on his shirt pocket. And I was like, oh, I'm sorry, you're more of a Copenhagen long cut guy. And he's like, that's different. That's what it is. And thankfully he was a trooper about it and let me give him a hard time. But yeah, he was like, all right, maybe it would be a good revenue source, but nicotine is nicotine. So I do like to point that one out. But other than that, that is all I have for you. Oh, one other thing that I did want to point out is two of the things that we cover is uninsurable drivers. So a lot of times people who have bad driving records or under the age of 18, we have a lot of, this is me just speaking off the cuff. This isn't on the presentation. Sorry. Yeah, I saw you looking and I'm like, nope, this is just off the cuff. But so, seasonal workers in some of these rural counties, they're not able to be covered if they're under the age of 18. We do cover them for the uninsurable drivers and then fire scoring as well. So we don't get coverage for our reinsurance carrier, but we know that fire is a risk to our counties. So we provide the coverage to our counties. So that's a big one as well. If you were to go out into the private market and look for coverage based off of, and they had the fire score, then those are usually pretty significant and or they don't provide coverage in some areas. So that gets a little squirrely with fire scoring as well, that I wanted to point out. And then also, I believe we discussed this last year, but our $5 million builder's risk policy that's already included in there. So a lot of times builders will require you to have a builder's risk policy and they'll get it, but they will charge you for it. We already have that up to $5 million. So you basically just let us know. And if they need a certificate or proof that you have it, we're able to provide that for your builder. Any other questions at all?
Any other questions?
Only question I had on that reinsurance,
Mhm.
that how long have you guys been with that same reinsurance carrier?
That's a great question. I'm not sure because I've only been here for 2 years. So I know at least 2 years,
Okay.
but I can find out.
And then the next best was at 3 million.
Mm-hmm. So we're currently with Ambridge, and then I believe it was Old Republic that we got quoted for. That was over 3.
It'd just be interesting to know how long that Ambridge has been on there, and then there was one previously,
Mm-hmm.
what their rates are now.
I can make it.
What was the one that quoted you free on it?
Old Republic, I believe it was.
Anything else? Any other questions? Roger?
First of all, thank you
Yes.
for the presentation and the information. So a couple of specific questions, and then it might be good for us to have a more general conversation about how we insure our organization. So we had a chance to chat a little bit with Bonnie about this. We're looking for you.
Yeah.
I want you to be surprised today that
Yeah,
she
that's
said
fine.
she would pass it along to you. So could we talk about fees just a little bit?
Sure.
We've been trying to understand the fee structure, and it looks to us like contained within this total of $1.8 million of the combined premiums,
Mhm.
that about $225,000 of that is fees
Mhm.
that go to MACo. are you able to speak to what those fees are used for within MACo that are a part of this payment?
Yes, so do you know, if that dollar amount was including the agent commission as well?
It does not.
It does not include the agent commission, okay. The majority of the fees just go towards operations for the property casualty trust. So the buildings, salaries, insurance for the property, for our E&O and whatnot. But it's basically just the cost of operations for that breakdown.
That's what you need to do to operate the trust and
Correct.
what you just spoke to.
Yes, because we are nonprofit. I don't think it's like a 501c3 or anything like that, but we don't make any profit off of it. All of it is just towards cost of operating the services, and then everything else goes into the pool that is set aside for the different counties.
Okay, thank you for that. And commissioners and Ms. Barker, so the fee for our agent would be projected to be a little over $147,000 should we retain them.
Mm-hmm.
But we've spoken with them, and they've agreed to cut the fee by 50%. Okay. So I just wanted to get that out on the table for the discussion today. And again, this is just more of a general conversation. What we've been looking at and thinking about is to just explore our options in light of our obligations, obviously our fiduciary obligations, not to state the obvious, but that's what we should do. And so that's what we've been talking about and thinking about. And if for the reasons that you've already spoken to, since I'm just looking here, the total combined premiums as of fiscal year 2020 were $596,000, right? And this year it's $1.8 million. So just to give us all a little bit of a general idea.
What was the first year?
2020, it was $596,629.
Gone up about 1.5 over the last 5 years.
Exactly.
Yeah.
1 point. So it begs, obviously, I'm just mentioning that to talk about why we need to be thinking about this. It's a major expense for our organization, for our commissioners to be thinking about.
For every organization.
For everyone, right? It's our ultimate bosses. So we just feel like we would be remiss if we didn't acknowledge that, think about it, think about what the future is, make sure we're making good decisions. So in the way you operate, if we wanted to take a few more days, I understand. Bonnie shared this with us. Okay.
Yes. Yep.
That I know you want to bind these policies by the 16th of June.
Correct.
That's what she shared with us. So if we could take a few more days specifically to look at the property insurance coverage premium, we wanted to suggest to our commissioners that you could discuss that and provide direction on that. And I wanted to let you know about the change in the fee structure for our agents, should we retain them. And the other piece that I wanted to talk about was on the liability piece. And I also wanted to say, we've spoken to our county attorney's office, and I did this last year too. I wanted to let you know that our county attorney's office has expressed satisfaction, with the legal services.
Good. Love to hear that.
Yeah, I thought you would. Okay?
Yes.
So I wanted to make sure you knew that. But we're also aware that one of the things that Yellowstone County did is that they have elected to go for their property insurance outside of the MACo pool,
correct,
while retaining their coverage for liability with the MACo pool. And we're interested in that. We're interested in exploring that with our commissioners, with you.
Yep.
So I just wanted to put those things out on the table, commissioners. And if we could have a few more days to evaluate this renewal proposal, we would like to request that. If that's everything I'm saying, if that's agreeable to the county.
One thing I will note with Yellow is their deductible is $250,000. So for just lack of a better term, self-insured up to $250,000. So, which is pretty steep. So we step in for cat losses, basically like a stop loss. But they were grandfathered in, but Bonnie did tell me that we would just have to put it before the board to get that approved for if we were going to do the liability only portion of it. And the only thing that I would request is that if you have a quote for a private carrier, that we would be able to look at it and make sure it's compared apples to apples.
Oh, sure.
So, because a lot of times, like I had one county come to me and they were able to get a private carrier that was $15,000 less in their premium annually. And the first question I asked was, what's their deductible? And it was $250,000 and ours was $5,000.
Oh.
So it was and that was a few years ago, but it was steep. And, if you don't work in insurance, which that's the point of an agent though, is to advise you on that. And we are a member service organization. So we want the members to go where it is best for them. I obviously believe that MACo is the best product. We have the other services on top. So like the jail review program, to have that done, the purpose of that is to decrease liability. So you're having less liability claims. That on average for this size facility would be a $30,000 to $50,000 cost to have that done. Or Mackenzie would still be a resource to you. So, all of the services at MACo, aside from those types of things, are still there. But then being out of the pool would still, you would not be included in the appraisal cycles then. So if you were to need appraisals for your private carrier, that would come at a cost to the county as well. So.
And we want the MACo pool to be successful.
Yeah.
It has great value. No intent here to harm that, but as I said, our first priority has to be to look at this and see what our options are. So, commissioners, of course, you take your meeting wherever you want to take it, but maybe we could have a conversation about what we were thinking to kind of summarize was that we could retain our agent relationship with that reduction in their fees of instead of 10% being 5%. Let one possible option here would be to let Ms. Barker and MACo know now that we're interested in staying engaged with the pool for the renewal for the liability coverage. But take some time to really look at the property insurance. There may be some options out there that have the potential to really save some money without incurring additional liability. It has to be both, right? It can't just be about the money. It also has to be about the risk analysis. So wanted to present that to you all today to be thinking about and have a very open discussion about it. But we think that might be a reasonable path forward that we'd like you to think about and talk about today.
What's the reasonable length of time to take to do that?
Next question. Have you been looking for property already?
In a very not in a very detailed way so far, but our policy, please correct me if I'm wrong, our policy will go to the end of June, right? It goes to July the 1st.
Yep.
But MACo wants to bind the new policies by the 16th of June. So for a timeline, let's say hypothetically, if we found an option that we thought was better than staying in the MACo pool for property insurance, we wouldn't even consider it unless we knew it could be put in place with implementation and quality and cover everything we need by July the 1st of this year. So that would be within the next 28 or 29 days. Was that what you were asking about?
Yeah. It sounds like we have to make a general decision within 15 days, right?
Thank you, Commissioner. Now I understand your question better. No, I would suggest that if what I just threw out sounds like something you want to consider or do, that we would want to actually get everything squared away and be prepared to have you all make a decision by June the 11th.
That
think you
question there. Yep.
I think so, yeah.
Okay.
Well, I mean, we are continuing to pay fees, and I'm sure your knowledge and background is very important. We have that. Could he help us with some of our search for a property casualty carrier that would meet our needs and address our budget issues, or is that?
Oh, yeah, yeah, we could definitely.
Help?
I just asked if he thought that he would have enough time, because usually with this size, it takes a minute to put it together. And that was my only concern, was if he had enough time, and he thinks he does, so,
Yeah, I think we'd have to get on it really quick.
yeah.
Yeah.
The other piece, just to repeat it again, that Ms. Mark already mentioned to us, was that the PCT board would have to agree to allow this change in the way we're being covered. Right now, we're getting both property and liability insurance. And what we're talking about is possibly, depending on what our research brings up, possibly going with liability only. And I don't want to speak for anybody, but what I was told was that the only other county that has that model in place right now is Yellowstone County.
Right.
But in terms of the other more urbanized counties within the state, it's my understanding that Gallatin County doesn't have any of this coverage through the MACo pool anymore,
Correct.
and neither does Missoula County.
Correct. Missoula does everything in-house, but I want to say they were with Travelers.
Yeah.
I'm looking at you like you're the
Yeah, I
agent,
think
sorry,
they're a
but
self-insured program.
is
now.
Missoula
I
self-insured?
think so. I don't.
Yeah, I think so.
believe
That's
they are,
what
yeah.
one of the commissioners told me, I believe. But I kind of said that generally, so I don't know if everything's.
Yeah,
Yeah.
I'm not 100% sure on that either.
I believe liability is with Travelers, if I remember, because they had come to us and we're potentially looking at coming into the pool as well. And then, and I apologize, I wasn't part of the meeting, so I don't know what the details were, but where they wanted the deductible versus where we were able to offer it did not match up. So they ended up going elsewhere. And then Gallatin, I think, is private for both. I don't think they self-insure for anything, but Yellowstone was grandfathered in. I don't know how long ago, but they are the only one, and that's just what they've told me, is that they were grandfathered in. So.
And I guess, commissioners, I would also throw out for you to be thinking about. I mean, we have our trend. Frank, you put this together for the past several, going all the way back to 2012. So thank you for doing that. But
What are you looking at?
I'm sorry, Commissioner. I'm looking at what we have paid for our premium.
Okay, it is not part of our package.
No, it is
No.
not.
So, Mr. Chair, look at yeah, just a nutshell that you wanted some conversation about this, and I don't know if we have to make it like a motion or anything ultimate, but just a nutshell. I mean, you look at those trends and what we're facing, and we have to.
I think you should. I'm not opposed to it at all.
There's, I mean, I don't know any other way around it. We have to do that. We have to question everything that costs. Because it's not our money. It's the taxpayers. And so we have to find the best deal we can. But your point is really well taken about comparing apples to apples.
Yeah.
So I have that in the back of my mind and say it to our agent now as we go forward. We've got to look at the same coverage or similar coverage, and comparing apples to apples. But I think it's important that we do take the next few days, the 11th or whatever, to try and see if we can find something that's more value to our taxpayers. But if not, then back. And I do agree with the liability piece right now. I think we've gotten good value out of that. I think we have great relationships built, and we've had the process with our county attorney's office has been really good. But I guess that too, it all has to be looked at.
Yeah.
We've got, that's huge, from 500 to almost 600,000 to 1.8 million in that period of time. All insurance has gone up significantly, but we would not be doing our taxpayers a service if we didn't check it out, look at the market.
Absolutely.
I think we probably need to make a motion to move forward with checking this out in that manner. Yeah, do we?
Would it be a motion to postpone the decision? 5 days or 7 days or whatever?
What would you recommend?
Mr. Chair, I would think it would just be a motion to ask our staff and agent to look at the market
Get back to us.
on the property casualty side and let us know if there's what the options are in terms of coverage. You can get back to us as quickly as possible so that we can ultimately make a decision by the 11th.
You had mentioned the 11th.
So commissioners, yes, but actually this would assume, we actually think that what we have is basically a week.
Yeah.
Because if we wanted to put it on a future agenda, it has to be posted for 48 hours. So that takes us into next week. So we would essentially have from now till next Monday to research this thoroughly, get the best information we can, and come back with a recommendation to you.
Yeah.
If you don't mind, I'd like to ask one more question. I'll put you on the spot.
Oh, geez.
No, you may not know
Yeah, I'm
the-
like,
And if you don't know the answer to this is just.
I won't BS you. I'd rather say I don't know versus try and lie to you.
So the premiums that we have that are a part of your renewal package,
Mhm.
it's a little over $1.1 million for the liability piece.
Mhm.
If we were to break away and not, hypothetically, if we did not stay in the MACo pool for our property insurance, would it affect the existing premium rate that's been quoted to us here today?
For liability, or I don't believe so,
I wouldn't.
because
think
they're
so.
calculated separately.
That's what
So the liability would still stay the same.
I'm sorry, please go back.
No.
Yeah.
Yeah.
Mr. Chair, I have another question, and you may or may not know the answer to this one as well. The board action, the PCT board action, that we'd be relying on if we decided to go to just to remain in the liability pool. I honestly don't know the mechanics for you. What would that look like, and how long would that take? And do we feel comfortable moving forward in the decision without that decision? That's a much more complicated question, but what would that do?
They're pretty good about short notice, because a lot of the settlement claims that we have we have 2 weeks to decide, we have 2 weeks to get together. So if this were to come right now, is kind of hard because of district meetings is the only problem. But generally speaking, I can say, hey, can you meet this Wednesday? And they're pretty good about it. So I would think that they would put in the effort to at least jump on a call really quick. If it's going to take, 15 minutes to present it and make a decision. It's formal, but it's not drawn out.
Sure. Yeah, that answers my question.
Yeah.
Very active board.
So yeah, very active board. So I can get them together pretty quickly. And you should do you go into our system a whole lot?
Kevin has access to it.
Okay,
Yeah.
perfect. Everything is pretty self-explanatory in there, and it's pretty right there on the agent dashboard for your loss runs, your full-time employees, and your property. And so it'll be same way it is in here with the building and contents, equipment, and vehicles.
Okay.
It's labeled pretty clearly to run those, so you can get the information like today on all of that. But this is my cell phone number on here.
Okay.
So if you need help, the 3235 is me. So if you need to get a hold of me, you can text or call me on that number on the very back page.
Oh, perfect.
Yep.
Okay, great.
Yep, that
Thank you.
3235. So if you need access to me to get any of that information quickly, text is probably the quickest option to get a hold of me.
Okay, perfect. Thank you.
Okay, so are we gonna go for a motion here to do that? Do I hear a motion?
Sure, very simply, Mr. Chair, I would move that we ask our staff to work with our agent, look at the market for property and casualty opportunities, and get back to us with a recommendation as soon as possible.
Second.
All right, we have a motion and a second. Any further discussion? Any further discussion?
Is it? I can vote on this, can't I? At this point, I mean, I will recuse myself. We don't want there
Then I
to
will
be any.
second the motion.
Right.
All right. All right. Is there any further discussion? Any further discussion?
I am hopeful.
Yeah. Right. Something to save our taxpayers a little bit.
Yes.
All right.
And I'm just just for personal information, I'm never offended by somebody going out to the private market. I think that that also, when you come back, it gives me a little bit more confidence in our program. So we did have one quote last year and they ended up not going anywhere, and the market looks like it's in our favor. So.
All right, we have a motion, a second. Is there any public comment on this motion? Any public comment? Seeing that, we will move to a vote. All those in favor of the motion to have the staff analyze this, get back to us as soon as possible, say aye.
Aye.
Aye. Pose same sign. Motion passes 2-0. All right. Anything else? Is there any public comment about other items other than to make it a point to make the public of our meeting available to the public? Public item, comment on any other item? Is there anything online or that at all? Okay. All right. There seeing no public comment. We're adjourned.
Thank you, Hope.
Yeah, thank you.
Lovely.
Appreciate your time.
Lovely.
Thanks, man.
Thanks. Yeah.
Thank